Hi, today I'll be presenting on the definition of significant individuals and concessional stakeholders for CGT purposes. So small businesses can be entitled to concessions which allow them to reduce, disregard, or defer some or all of a capital gain made on the disposal of an active asset. The CGT concessions that are available to small businesses include the 15-year exemption, 50% active asset reduction, retirement exemption, and rollover relief. So in order to be eligible for the 15-year exemption and the retirement exemption, if the SBE is a company or trust, it is required to pass the significant individual test. So an entity will pass the significant individual test if it has at least one significant individual before the CGT event occurs. A significant individual is an individual in a trust or a company that has a small business participation percentage of at least 20%. This percentage is calculated by adding the direct small business participation percentage by the indirect small business participation percentage. A significant individual can also be a different person each year. So now I will talk about direct SBPP. So with regards to a company, this amount will be the lower of the percent of voting power the entity is entitled to exercise, percent of dividend payments the entity is entitled to receive, or percent of capital distributions the entity is entitled to receive. With regards to a trust, where entities have entitlements to all income and capital, the amount will be the lower of the income the trust is beneficially entitled to, or capital the trust is beneficially entitled to. With regards to a trust where entities do not have all entitlements to all income and capital, the amount will be the lower of the distributions of income that entity is beneficially entitled to, or distributions of capital the entity is beneficially entitled to. So for indirect participation percentage, this is calculated by multiplying the holding entity's direct participation percentage in an interposed entity and the interposed entity's direct and indirect participation percentage in the company or trust. So now I'm going to do a worked through example. So in this situation, Company B is the company wanting to access the CGT concessions. Company A is our interposed entity, and then we also have an individual shareholder. So to find out that shareholder's indirect interest in Company B, we multiply the 50% by the 60%, which gives us 30%. Because 30% is more than 20%, this individual shareholder is a significant individual, and therefore Company B will satisfy the significant individual test and can access the CGT concessions provided that it meets the other requirements. Now I will apply what we just learnt to the 15-year exemption. So to be eligible for the 15-year exemption, the company or trust must have had a significant individual for 15 years during which the entity owned the asset. The significant individual must be over 55 and the event must have occurred in connection with their retirement, or the significant individual must be permanently incapacitated. In terms of the retirement exemption, if the taxpayer is a trust or company, then they need to pass the significant individual test that I talked about earlier to be eligible for this concession. Now I will talk about what a concessional stakeholder is. So it can either be a significant individual of the company or trust, or the spouse of a significant individual, if that spouse has a small business participation percentage of more than 0. The concessional stakeholder must also be an individual, not a company or trust. For the 15-year exemption, an exempt capital gain paid by a company or trust to a concessional stakeholder is not assessable or also tax-free to that concessional stakeholder. With the retirement exemption, any payment a trust or company makes to a concessional stakeholder is not assessable and not exempt income. But for both of these, the exempt or the tax-free amount is limited by that stakeholder's participation percentage. So to conclude, for an SBE to be entitled to the 15-year exemption and the retirement exemption, they must pass the significant individual test, meaning that they have an individual with over 20% small business participation percentage in that company or trust, whether that be direct or indirect. For the 15-year exemption, there are further rules regarding the significant individual. With regards to concessional stakeholders, for the 15-year exemption and retirement exemption, concessional stakeholders can be entitled to not assessable or not exempt capital gains based on their participation percentage in that company or trust.